So, welcome. Friday. Listen, Fridays are always a tricky day in these games, like in the marketplace, because you just don't know what to expect. When it looks so obvious, it ends up not being obvious. But let's just have a conversation about this Bitcoin OG dude that has opened a very interesting short. I mean, 420 million. Quite a big short, ladies and gentlemen. He's also short on Ethereum. Now, everyone's like, what does he know? Again, it's one of those ones. You just got a lot of capital and you're putting it to work. I mean, it begs the question, like, why are you going onto that exchange and just putting it out there? Place your trade, sit quietly, don't say a word. I mean, you can't when you're using that much size. And given that cryptocurrency, a lot of people are always navigating for wallets and what have you, it's always going to end up getting pulled up. What are we going to talk about today? We're going to talk about that position as such, but more importantly, I'm going to dive into a few metrics that are giving us an understanding of whether or not Bitcoin is pending a little bit of a pullback in preparation for what could be another rally to the upside. Remember, we don't have any data on the jobless claims or non-farm payrolls. Goldman Sachs has just come out saying that applications for the US jobless benefits increased last week. So it's telling us that, yes, the Fed is going to cut the rates. Then you've also got Paul Tudor Jones saying that he thinks, Mad Love Priest, that he thinks that we're going to see another 1999.com blow off top. That's where this bad boy comes into play, ladies and gentlemen. So we're going to talk about that in a second. This is the chart, the good old chart of the last 100 or so years of the stock market. You can't buy this chart, ladies and gentlemen. This chart was awarded to me as one of the early subscribers of Investors Business Daily. So yeah, they gave me this and it's given me the whole history, and we're going to break down why Paul Tudor Jones might actually have a point about the .com blow off top that is pending. We'll get into that very, very shortly. So, hold on, man, my head is killing me. Anyways, with that being said, let's get with the program, break down what we do and what we don't know, and let's just have a conversation, guys. It's Friday then. Nope. Anyways. So, okay. So, like, Bloomberg, they've yet to update anything. It's like a bit weird. It's 2 days old, and this thing has not been updated. Like, I don't understand why they're not really giving us any information. Here you go. It's just not been updated at all. And I don't understand why Bloomberg's not really talking. But anyways, the bigger picture is that the bubble story is coming into play. And that's what investors are anticipating, or big heavyweights are thinking that a bubble is coming into action. But we solidified that yesterday about the idea of whether the bull market is actually coming to an end or not. But according to good old Paul Tudor Jones right here, he says otherwise. Check this out. It says, Paul Tudor Jones says, ingredients are in place for a massive rally before a blow-off top to bull market. That's what happens with a bull market. It explodes to the upside, and then you then get the contraction. Likewise, with a bear market, it collapses. Where all else fails, the volatility index shoots up to significant levels, and then, of course, that's when the rally then starts to happen. So he says that the stock market is reminiscent of a setup leading up to the burst of the dot-com bubble in late 1999. And he says that the difference between now and 1999 is the US fiscal and monetary policy. All right. And he says that he believes the bull market still has room to run before it reaches its final phase. Let's pull it out. So you might not see it from here. Okay. But in 1999, that was there. Let's see if you can see that, right? That top bit. Let me just do this, man. Let's make it harder. So that's 1999 in the stock market, just this top zone right here. Fuck, you know. Anyways, that bit there, right? That's 1999. What was going on before that run up? Well, apparently it says that the price earnings ratio had expanded to 954% over the last 188 months, right? So 188 months, price earnings ratio was trading at 954% positive. That is wild. At that time, we had interest rates just trailing above 5%, right? That was then. Right now, we've just come from 4.5%, ladies and gentlemen, right? And you can see that the NASDAQ was effectively climbing and climbing and climbing. It didn't bloody stop. Right? And then, of course, collapse to the downside. You might not even be able to see it. There you go. That's the corrective move. I don't see it, but anyways, you get the idea. I've got the history right here. So Paul Tudor Jones says that that is something that could actually be happening right now. Let's back it up. Here we go. As it stands right now, NASDAQ, I've got some flavor for you today, ladies and gentlemen. Check this out in a minute. So NASDAQ right now, as you can see, is trading very, very nicely. Yesterday's losses as such came back with volume above average, but price effectively managed to trade towards the top side of the range, which is a good indication of strength. Go to the weekly. Look at where we are. All we're seeing is 1, 2, 3, 4, 5, 6 out of the last 6 weeks of volume. Only one of those weeks have been a distribution week where price was actually selling off. But price itself managed to stay within the midpoint of the range of the opening week, right? So that is good news yet again. So what Paul Tudor Jones is suggesting that he thinks that the market itself is due a blow off top. That blow off top could take us into some significant areas. If we just zoom out on the NASDAQ and we look at where it was back then and to look at where we are now, you can appreciate that it's just continuously moving up and up. There's no stopping this thing, all right? Riding the 5 and 13 EMA on the daily time frame, unless she breaks this 5 and 13 EMA, the narrative is that everything is going to continue to the upside. Now, what factors could compromise the rally? Of course, it's the Bank of Japan story. Of course, changes in monetary and fiscal policy. If the Fed says we're not going to cut rates, the market is going to react to that accordingly. So any negative data will scare investors. But of course, when you've got such strength in corporate earnings, and next week is a very big week for corporate earnings because banks are going to be declaring their earnings. A lot of semiconductor companies are going to be declaring their earnings. The logic says that if those guys don't come through with stellar results, then everyone's going to be like, oh, AI is sort of fading. That's a bit of a problem for us. And then everything will start to correct. But there'll be dip buying opportunities, in my opinion. In other words, Paul Tudor Jones is looking for what would be the blow off top where volume is climatic, shoot up to the upside, and aggressively then start breaking down. That's usually what happens when you're hitting all-time highs. Something similar to this. I think the blow off top will be something like this, where it sharply moves up and then sharply moves down and continues to move down. But if you've got strong and stellar fundamentals, it's going to be a little bit of a problem keeping investors off the idea of the fear of missing out on earnings from a company because the company is still doing so well. Now, let's just break down the topic of conversation, ladies and gentlemen. Here we go. Bitcoin whale opens a 420 million short on Hyperliquid. Now, I'm trying to get the actual address for it, but you can see here that we've got some interesting flavor with the actual position. You've got it right there. And of course, where is it? Here we go. So this is his Bitcoin position. And if you can see it right there, it's very brief, like it's not really clear, but apparently he's added to the position even more. And he's effectively running shorts on Bitcoin with quite a substantial amount of liquidity, 606 million short position with 8x leverage. Now it is, so he's added to it. His liquidation is 133,000. Everyone's like, oh my God, oh my God. He's also short on Ethereum as well. So that's a little bit crazy. If we just go to the Ethereum position is still open. That was at around $1 million worth of profit, but now it's at $500,000 worth of profit. It's not really showing me anything to say that he's getting rid of the position, but he's obviously waiting for something, okay? So let's just try and back the idea of why this participant might be going short. Well, first things first, in front of you is Bitcoin's open interest, and we have just seen a significant spike in open interest on Bitcoin. You can see the blue area right here. That is a big move up in open interest. It consolidated and spiked to the upside. Can we also back that up? So when we look at it visually over here, you can see on the open interest chart, you've got these two areas of open interest where you can assume that short liquidations are up here. And then, of course, long liquidations are down here. But Bitcoin seems to be stalling in and around this range between 125 and 120. Okay. Now, one thing that you do need to take into consideration is the order flow of Bitcoin. So we just quickly go over and have a look at Bitcoin order flow. And we can see that we do have a significant amount of orders down here, quite a lot as well. 30 million, 35 million, 39 million, 42, 30 million down there as well. So, you know, you've got quite a bit. Where's the 42 million one? Where's the 42 million? There you go. Just a second ago. There it is. 42 million, 220. You got $120,633. Bitcoin bid order. And bid order means that they're looking to buy at that position. So logic says that if Bitcoin can't sustain this range, we're going to have ourselves a little bit of a problem. Okay. So what do we need to see? Well, we need to see the stock market going up. But if the open interest is coming into play, then it means that there are participants coming into the chart and they are going to react at certain price points. So that's what we've got to really pay attention to. Now, given that Friday is always a bit of a tricky day, you've got to be very careful with Fridays. It can go just sideways or manipulate up, down, and then just do nothing. But they can also do run for profits. All right. Now, something that I do need to draw your attention to also is the idea of investor sentiment. Look at gold. Check this out. This chart right here shows you gold futures and options fund held long short change. And what does it show you? Well, green is the gold futures and options managed money long position, and the red is the short position. It's clear as day that there is dominance to the upside in gold. They still favor gold's price. Okay, they want to see it go higher and higher. Now, the problem that we've got is the investors are waiting for the market. Let me just sort something out. They're effectively waiting for the Federal Reserve to turn around and say to the market, look, we are going to cut the rates. That's what they're waiting for them to do. Okay. And when gold's price is moving up like this, it means that they're anticipating interest rates to be cut further. We know we're going to get cuts because in October, this month, the FOMC, they're going to be cutting the rates, and there's a 94% chance that they're actually going to do that. Any data that we get from now heading into that, of course, if the US government does decide to reopen again, and it's on its 10th day now, it's, we're going into data that, or should I say, we're making assumptions and we don't have the data to back it. And it'll be very interesting to see if the FOMC does actually come into play and talk about the fact that the US government is shut down. How are they going to come to an agreement or tell us the information on where they expect everything if they're not going to reveal the non-farm payrolls and the unemployment rate? Because usually what happens is FOMC gets that information and then, of course, presents it to us in the press conference. What are they going to say now? We'll just wait for more data. Oh, my God, it's not going to be great. Anyways, check this out. Global stocks hold steady. Treasury yields plunge as the US shutdown drags into day 10. Now, why am I talking about this again? It's because the shutdown itself is forcing investors to go into havens, all right? So that logically means that the stock market is more than likely going to correct. The yields are going to go up even more, but investors are starting to really just say, you know what, screw it. We're going into gold, and they don't care. And it's all because of China's accumulation of gold. The longer the government stays shut, the higher prices go. And that's the truth, ladies and gentlemen. Now, a little bit more flavor for you. XRP wipes out 16 billion in 1 week. Someone asks me, like, should I buy? Should I buy Bitcoin or should I buy XRP? Well, actually, no, should I buy XRP? If you want the truth, you are actually relying on the application of XRP, all right? That's what you're relying on. You're not relying on anything else. Are they going to put it to work, in other words? Otherwise, you've got a better chance of investing in a post office bond, all right? And you won't see any volatility, but there's a better chance of making money over there than you do with XRP. I'm not going to get into it. It's going to wind me up. Apparently, Bitcoin decouples from the miner flows. Now, you've heard me talk about this before. You've heard me say to you that there's a 4-year cycle that everyone's talking about. Wait there. Wait there. Where is it? Where is it? Where is it? I haven't got it. Damn. There was a conversation about Bitcoin's 4-year cycle. And the idea is that they're really challenging the idea of it. Now, you've got this. Bitcoin decouples from the miner flows with a negative 0.15 correlation and what it means for price. Usually what happens is when miners start putting money into exchanges, people start wetting the bed thinking, oh my God, Bitcoin is going to drop. But right now, miners are putting money into exchanges and Bitcoin just keeps on going up and up and up. In other words, miners aren't really dominating the space anymore or ever. Well, before they did, but now they don't. Why? Because institutional ownership of cryptocurrency is growing and growing, and Bitcoin is the main coin that they're invested in. Okay, so you can be really like, hold on a second. If the normal thing that everybody was relying on back in the day with cryptocurrency, from rainbows to cycles to miners to whatever, okay, it's all starting to like not come crumbling down, but you're now having to focus on the participants that are leading the reason to why Bitcoin's going up. Again, Wall Street decides if Bitcoin goes up or down, not you dudes in cryptocurrency. You had so much time to send Bitcoin to the moon and you didn't. Back when it was at 69, you could have held it at 68 or whatever. You could have held it even more and consolidated, picked it up and just retained your Bitcoin, kept on buying it and buying it. But what you ended up having was this recycling of cryptocurrency. That's all you had. The guys that were buying the dips were the guys selling the tops, and then the guys that were buying the tops were selling the dips. It was just the same money in crypto. That's why we never saw expansion in the market cap of Bitcoin. And now you've got Wall Street coming into play. Well, ladies and gentlemen, you've got all types of money coming in. Lots of it. And when you start seeing it breaking these metrics that people relied on so much of Bitcoin, it now confirms that Bitcoin, or should I say Wall Street? No, let's say it. Bitcoin is Wall Street's bitch. It is. It is. It really is. And Bitcoin has got a new home. It's all the way over here. 804,309. You wanted Bitcoin higher prices? There you go. That's where your Bitcoin supply is going. So you've got to be thankful for Wall Street, because I believe that the guys in cryptocurrency would have never been able to succeed the market cap that they want. All right. Cryptocurrency will easily clear 6 trillion, 7 easy. I don't see why it can't be overall $10 trillion market cap. Tell me why not. This rally to the upside on the NASDAQ is 15, 16 trillion. All of that. That's a $15 trillion market rally, man. That's crazy. So tell me why crypto can't do it. What's cryptocurrency market cap right at now? Here we go. Market cap, 4.13 trillion. And that is part and parcel a little bit of Wall Street stepping into there. Once you start getting the Bitcoin reserve, treasury reserve story coming into play, then happy days. But I will be frank with you, stablecoin is going to just kill it with market cap in the future. That's what I believe. All right. But overall, I believe cryptocurrency market cap overall will be a $10 trillion marketplace. It really will, because they keep printing money and there's nothing stopping them. And Bitcoin is getting used in different ways. You buy it on spot, you short it on leverage because of what they can do with it. It's naturally going to encourage more and more people to participate in it. But the biggest participation comes from the big boys, where you've got the liquidity sat right there. So when they say just get yourself a little bit of Bitcoin, it's true. Just get yourself a little bit and, of course, witness this balance keep going up and up and up. It will come down, but progressively keep going up, because you've got Wall Street mentality in that. You understand that? So what I want you to do is this. Imagine this is the Bitcoin ETF balance. Just imagine and visualize it so you understand what I'm saying. This is the Bitcoin ETF balance. And what you're seeing is, say, for example, it's at 10K, comes up, comes down, comes up, comes down, and it progressively keeps on doing this. What do I think the Bitcoin ETF price will be? I actually believe that the Bitcoin ETF itself, because I gave projections on Bitcoin ETF, and I said to you on the day of its IPO, this thing is easily going to go succeed to around $60, $70. Okay. That was at 30 and 24. All right. Go back in the live streams. You know, I said that. Okay. Now it's at 68. This will go easy to about $200, $300 easily. Because if you're giving us the projection and the trajectory of Bitcoin's price, where we're looking to see 180,000 Bitcoin, yeah, that's what the next price point is right now. $180,000 Bitcoin. That's what they're talking about, you know? So that obviously does have an impact on the dominance as such. But if you just understand that your crypto, your Bitcoin is going to keep going up in value as long as Wall Street keeps playing it. But the way Wall Street will play it is changes in fiscal and monetary policy will impact why the money is going to go into the ETF and why it will go into the bonds, why it will then go into dollars, why will it go into the stock market, why will it go into any other asset class. The second Wall Street gets into crypto, it starts to treat it like the legacy markets. Please understand that. Why? Because no one gave a rat's backside why the non-farm payrolls would have been something you needed to pay attention to back in the day. No one in crypto would even care to think about the non-farm payrolls. No one in crypto would even care to think about the consumer sentiment readings. No one would care about the CPI. No one would care about anything. They just focused exclusively on crypto. But now that you've got Wall Street into crypto, you have to pay attention to Wall Street, because the biggest purchasers of crypto is Wall Street. You can't rely on metrics on cryptocurrency anymore, because that right there is evident of it. Says it here, look. Where is it? 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 Just read it for you. Here we go. Here you go. This is a stark contrast to previous cycles where minor flows to exchanges played a key role in Bitcoin's price movement. However, the current cycle's positive price action can be attributed to increased demand from investors and institutions. Okay? So it says here, in past cycles, when the price rose, miners often transferred large amounts of Bitcoin to exchanges to sell and take profits, creating positive correlation between price and the miner flows. However, meaning that as prices increased, flows also increased, but they're not seeing the same thing right now. Okay? And that disconnect right there tells you that Wall Street is now taking over crypto. You might not like the sound of it, but do you want your Bitcoin to go to 200K? That's the truth. If you want your Bitcoin to go to 200K, then you've got to be following what Wall Street does. That means you look at Forex, you look at Euro, you look at gold, you look at yen, you look at the Dixie, you look at the yields, you look at the bonds, you understand the interest rates, you look at things like this, the here we go, like, you know, gold futures, and understand what's going on over there. You then go over to the idea of this right here, the identifying signs of a stock market bubble, the margin balance ratio. Okay, when it goes above 0.4, it means you're in bubble territory. Right now, we're at 0.44, and we're up in this red area. That would then sit tight with what Paul Tudor Jones is saying. So we're now looking for a blow off top. It's all adding up, isn't it? So we still got more movement to the upside. But when you see that big aggressive move to the upside, that's your blow off top. And I believe that once we know where we are with the interest rates and we know when we're going to stop cutting, that's when we're going to get the blow off top, in my opinion, ladies and gentlemen. So just please take that into consideration. Now, I've got some flavor for you. For my stock guys, there's another stock that's woken up. Check this out. Serve Robotics just woke up out of nowhere. It's been recently an IPO, okay? This company develops AI-powered low-emission sidewalk delivery robots that deliver packages in cities. So now you've got to understand, when you're investing in something, tell me what problem it solves or what benefit it creates, okay? Because solving a problem means that there was a benefit before, but then there was a problem with it, and now something has been created to fix that. That's the solving problem. But then when you've got something that provides convenience, okay, that's another service. That's a different service to a problem solving, okay? You might think I might sound really crazy saying that, but there is a clear difference to it, all right? This creates delivery robots and delivers packages in cities. We don't know that maybe Amazon could get into bed with these guys and say to them, okay, can you create this for us? They just had a smack of volume coming into play. Their earnings per share is due in 27 days. Something must be brewing. Its volume is up 282% and it is up 34.76% for the previous day. Something's brewing with a company like this, Serve Robotics, all right? If we go and have a look at the volume that's been coming into play across the board, we have a look at it, again, therapeutics, biomedical, okay? And, of course, you got more technology stocks right there. I would say to you guys, you want to start paying attention to the following companies right here in terms of earnings. ASML, okay, is coming out with their earnings very soon, actually next week. So earnings per share is due in 5 days. Currently $980 a share. We're seeing some accumulation right here, but no selling. Well, not so much no selling, but it's not selling above average. So that's good news for us. These guys make the chips that NVIDIA wants to sell. They're the big boys, okay? Then you've got TSM as well. Taiwan Semiconductor right there, that company. And you can see, flipping now, it's just not stopping. Look how beautiful all this accumulation right here. Their earnings per share is due in 6 days' time. And then, of course, you got JP Morgan and all the rest of the banks that are coming into play. Just quickly go on and have a look at some other assets that we are talking about quickly. Circle. There we go. I'm actually fried today, ladies and gentlemen. Here we go. So Circle currently trading 0.02% to 9% positive in the market opens, pre-markets. Bullish. Let's have a look at Bullish. Bullish is currently trading 0.21 up to $68.85. Obviously, I've got my positions right here, but it's obviously nothing happening because the market is closed, and this is on BTCC. So if you want to trade tokenized stocks, go to the pin to the top of the chat is the link to actually access that and trade various numbers of stocks on the stock market and Forex and crypto and all those fun and games. Now, going into price action for the Bitcoin. Here we go. So 1 hour time frame, we've seen Bitcoin making a little bit of a movement to the upside. We've got a nice little red vector candle recovery region coming into play right now. You've got a sweep of the Asian session. The market is currently not open. It's open in the next minute or so. And just having a look at other assets across the board, you've got Solana trying to make a nice little bounce from these lows. And of course, Ethereum right now is not really doing too much. This guy in his short now he's down minus $316,000. He was up 500,000 and now he's down 316,000. But when you're playing that amount of positions, really. 300K is nothing. Let's be honest. But yeah, you can see that the market is trying to do some little recovery bounce from here. Paying close attention to the idea of gold. It's consolidating. Silver is just not stopping, ladies and gentlemen. It's just an absolute monster. Platinum seems to be doing the same thing, but palladium is, they do trade really well, these assets. When you do trade them, they do trade really well, but there's a large spread on them. All right, so you've got to be very careful with the spread. Going into the pre-markets, Nvidia is currently gapping up at the open. We've got a gap down here, so we've got to be careful of that. Tesla right now is currently keeping it really tight, not really doing too much. Red vector candle region up there. I believe that is where Tesla's going to end up on the vector candle recovery. So keep an eye on the 460 region over there. Going into the other Mag 7, you've got Google as well. Not really doing too much. No real big activity happening in the pre-markets as well. So that's a good sign. Amazon trading up nicely. It's got a gap down at the open, which is very, very interesting to say the least. However, looking at the bonds market, 2-year yield currently down. 5-year yield down aggressively. 10-year yield down aggressively. 30-year yield down aggressively. The 10-year futures are currently trading positive. And the NASDAQ is going sideways. That tells me something. If the volatility index is trading positive and the 10-year bond market is trading positive, that only means that NASDAQ could be getting primed for something. We've got to be very careful with it. It is extended. And what reason does the market have to buy today? What reason does it have? It doesn't really. It doesn't really, other than if Trump turns around and says something stupid about the relationship with imports in China. That's the only thing that could trigger it, ladies and gentlemen. More importantly, we have data coming out, preliminary consumer sentiment and preliminary inflation expectations. Again, this is going to solidify the idea as to whether or not we're going to get interest rate cuts. If consumer sentiment is down, that's going to lead the market to want to say, yes, we should cut the rates. Why? Because if consumer sentiment is down, that means consumers don't want to spend money. That means they ain't going to be putting money to work. That means the economy is going to slow down. Preliminary inflation expectations, well, if they're expecting inflation to come in higher, that's going to be a bit of a problem. So you've got a double-edged sword right now, because if they expect inflation to be higher, then the Fed's going to be like, should we actually cut the rates? So you got two parts of data right there that could really screw things up if they are hitting certain extremes. Okay? Cool. Anything else, ladies and gentlemen? That's the question. The only way it will be different this time is if Wall Street buys miners out. They will never do that. But they're using Bitcoin as a little bit of it's just a hedging play. That's what they're using it for. They really are violating Bitcoin, which is sad. Any questions, guys? Can you have a look at Bitcoin on the weekly chart at that huge green vector candle on the top of the range? Do you think that might be a hint for something to come? Yes, most definitely. Yeah. You see, the thing is, guys, I will always stand up to anyone. And I will tell you all, if I think Bitcoin's going to go down, I will tell you it's going to go down. I ain't scared to tell you just in case you guys might not like what I hear. If you don't like what I hear and you ain't ready for this marketplace, simple as. Don't come to trading. Don't come to an industry where it's dog eat dog. Simple as. You're in the most sophisticated game, in the hardest, easiest way to make money. One of the most... to explain this to someone, they just wouldn't be able to fathom the intricacies of this marketplace on what you have to take into consideration. It's a tough game. You're in the hardest industry, next to doing open heart surgery blindfolded, and the odds of that are 0. So yeah, you are in the hardest business, but you've got to take it. If I say to you, Bitcoin's going to come down towards that green vector candle and near enough fully recover it, welcome it. Why wouldn't you? No, because Bitcoin needs to go higher. It helps my bag. It helps my bag. Come on, man. If you're doing it properly, you'd be welcoming every price drop. You'll welcome it. The people that are pissed off with Bitcoin going down is because they're buying here. Yeah. They're buying at 333. It goes all the way up to 126. They got the big dick. Then it comes back down towards 118 and starting to shrivel a little bit. And then when it drops all the way down to 112, I'm going to end up saying something bad, so I'm not going to say it. Ladies and gentlemen, have yourselves a wonderful weekend. I hope it's made sense for you all. Please like and subscribe. Do MM still use old tactics like mean reversion? Of course they do. They just do it quicker. Of course they do. It's the basis of it. You can't eliminate a law. You can't eliminate an average. you know, just because everything's doing different things. No, they will always use the same average, same laws all the time. All right. Take care of yourselves, ladies and gentlemen. I'm going to put my head flat onto the floor because it's absolutely burning. Take care of yourselves, gang. Have a great weekend.